All right, good morning, Granite Rock people. Thanks for joining this town hall where we're going to learn about life insurance and what we need to protect our families. This can be a confusing topic, that's for sure. Often people roll the dice and go without it because they're not sure what to buy, and policies can be expensive. To help guide us is certified financial planner Jacob Young, who will explain how it works and whether we need life insurance or not. Your questions are welcome. Please put them in the chat. This meeting is also being recorded so we can share it with team members who couldn't make it today. Jacob, welcome to Granite Rock, and thanks for taking the time to be here.
Thank you, Shannon. Nice to be in front of you guys again, all of you. And today's topic isn't one of the more exciting topics, but it's very important, as Shannon mentioned. And I use the title Investing in the Right Life Insurance. And the reason I like that term is because it's not necessarily an investment, although there are options you could make it, but it's more about protecting your investments. So in that sense, it is an investment in itself, is that it's going to protect your other investments and assets. Well, before we get into what kinds of life insurance, let's just make sure we have the understanding of what a life insurance contract is involved, what's involved with one, and that is, first of all, the death benefit. Now, the bad thing about life insurance is why it would pay out its benefit, but the good thing is that it's a very straightforward policy. It's not like auto insurance where who's at fault and was there a ding in the car or does it need to be totaled? Or disability insurance, how hurt are you? Can you really work? Is there another job you can do? Life insurance is pretty straightforward. So that death benefit, when there is someone passes away, that death benefit is paid out in a relatively short amount of time. Another part of it is premiums, how much you pay, what's the cost of the insurance. And that's also pretty straightforward with life insurance, although it can be tricky sometimes. Most of the time, it's pretty straightforward how much the insurance costs. And then sometimes they add a cash value to it, kind of an investment account that goes along with the insurance, so it can last a lot longer, even your entire life if needed. And sometimes there's things called riders that are thrown in there. Now, typically a rider is maybe on your life insurance, you can add something for unexpected death of a child, or it pays out extra if there's a accident or a dismemberment, maybe you lose a body part. And typically I recommend staying away from riders with life insurance because it makes the insurance company more money, but occasionally they are right for your particular situation. So now that we have the basics, what are the purposes of life insurance? So the first one is just loss of income. What happens if something happened to you? How does your family, how do your debts, how does everything continue on if you're not there earning your income or whatever sources of income you had? So it's almost it's the insurance claim is, most insurance companies will pay out that death benefit immediately after death, a death certificate and some paperwork, and you have that. So it's a really good, quick way to protect your family and many other people that would be left with a hardship if something happened to you. You can use it to pay off debts. Think of a mortgage, think of car or credit card debts that you have. Life insurance helps with some of those things as well. Even if there's not someone needing your income, you may not want to burden someone with these debts and other things like that. And final estate expenses or estate taxes, those are all reasons that life insurance can also be used. Those are they can be a little more complicated for what we'll talk about today, but there's other reasons for that. And one thing to remember is that a death benefit is tax-free. So you don't receive a large amount of money and then say, well, now I have to pay a lot of taxes on it. Death benefits are tax-free, which allow you the money to go a lot further. So that's another good thing of life insurance. Well, I'm going to explain two different types of policies, knowing that there's a lot of different ones out there. The first one I want to talk about is term life insurance. So this gives you protection for a specific period of time. You choose how many years you want it, and you pay premiums that are level for the entire time of the contract, the amount of time that you chose. The price doesn't go up. And if you pass away during the time period that you've selected, you receive a death benefit. So at the end of the term, the policy just terminates, and they come in a variety of years. So typical is 10, 20, and 30 years, but there are insurance companies that will do 1 to 30 years if a particular time period meets your needs. And the premium remains level, which is a nice thing, knowing that it's not going to go up on you. And the one thing I want to make clear is that most companies offer this, and you just want to make sure yours company is going to offer this. It's called guaranteed renewable. Imagine if you chose a 20-year policy and in year 18 you had cancer and you were able to beat the cancer, and so far things are looking good, but there's not an insurance company that's going to insure you again after your 20-year term period expires. So guaranteed renewable is going to cost you a lot more, but within the contract, you weren't cut off at 20 years. You can actually continue the insurance, and you can decide if it's worth it or not based on the higher premium, but at least you know you have insurance at a time that maybe you're not insurable. Now, there's another type of life insurance called permanent. Now, this has a lot of variations to it, but in generally, it once again gives you protection for your life, but your entire life. It stays with you permanently. Now, if you're paying for insurance your whole life, knowing that at some point you will die, that's a common knowledge I hope you're all aware of. But it offers you protection your whole life. It is going to cost you a lot more for that insurance, knowing that the insurance company needs to pay you at some point, pay your beneficiaries, not you, at some point. So to do that, a portion of your payment is placed in a cash value. So it combines a cash value and life insurance in one place, an investment account, so to speak. And that cash value can grow tax deferred. So it is a protection from taxes. So it's tax efficient. And it helps you, that cash value will help you pay for the insurance as the cost goes up. So you only have to pay a set amount for your entire life. So as your insurance cost goes up, that cash value that you built up helps to pay the insurance cost as the cost goes up for the insurance. A nice thing is you can borrow from the cash value. It does reduce your death benefit, but you can borrow it if you have an emergency. And you can earn interest in many different ways. So the various types are universal, that earns a fixed guaranteed interest rate, kind of like a bank account, but earns a lot more interest. Variable allows you to attach that cash account to something similar to a mutual fund. And then you have whole life and index life, which earn interest in different ways. So there's various ways to earn interest on that cash value account. Now, why doesn't everyone want permanent life insurance? One, it's going to be more expensive, and there's a few more fees associated with it that are hard to see because of that cash value pays some of those fees. So your investment doesn't grow quite as much as if you just saved it somewhere else. So which one is right for you? Here's kind of a basic summary, and there's so many other reasons that we couldn't list all of them, but here's some basic ones. If you're busy saving for retirement, you need to put money towards retirement. Saving into the 401k at Graniterock and buying a term insurance policy is going to be a much better value for you. If your needs are changing, your family's growing, or maybe kids are moving out of the house and your needs are changing, a term insurance for a certain amount of time based on your current needs at that time is valuable. And then you can do a new term based on how your needs have changed. And especially if you have a large insurance need and not a lot of income, you can buy a lot of insurance with term life insurance. So permanent, if you want something that lasts for your entire life, there's a reason why you need that that's a good reason to buy permanent insurance. And if you have high income, because of that tax deferred benefit, that's when you offset the taxes, that covers that extra cost, so to speak, from the fees that they charge. So I'm going to take I'm going to move to the next, there we go. So I'm going to take a quick break right here and allow you guys to ask any questions or answer any questions that come up. And while you're doing that, I do have a little test for you now that I've flipped the page. Which life insurance is best for someone who's starting out with that needs a large amount of insurance, but does not have a lot of disposable income? I'm hoping you remember that. It should be a pretty easy answer, but even if you have the wrong answer, you'll still be entered in our drawing for Starbucks gift cards. Let us, any answer you give us, we'll put you in the drawing. And we have a question. Go ahead, Shanna.
Yeah, the question, can you guys hear? Okay. This says, the first question is, can we borrow against our life insurance policies and pay back the borrowed amount? Question here. Yeah, can we borrow against our life insurance policies and pay back the borrowed amount without incurring interest, as opposed to borrowing from banks or other loan agencies who charge interest?
So the question is, I'll summarize it, just can we borrow against this life insurance, and is that better from borrowing from a bank or someone else? So the answer is, it's going to be a better value from borrowing from a bank. But with life insurance, you never can get a whole lot of money. So to buy a house in this area and save enough in a life insurance, that's not going to happen. Borrowing it, maybe you buy a fixer-upper home and you can borrow a little bit from your life insurance. That's better than what current interest rates are at right now. It helps for other things too, emergencies, and the interest rate's pretty low. But remember, you're borrowing from yourself. So when you take money out of the account, it's not earning interest the same way it normally does. So it does cost you something. So not borrowing is always better than borrowing. And there's so many different ways to borrow nowadays that to just say, oh, life insurance is the best place to borrow from isn't always true. But remember, you have to build up that cash value enough to borrow against it. And that's, yeah, so you wouldn't buy a life insurance, permanent life insurance with the intent of borrowing it. You would buy life insurance because it's necessary. And oh, by the way, you can use it for an emergency. So hopefully that answered some of your questions, and it's just so complicated that there's no quick yes or no answer on that one. Was there any other questions, Shanna?
Yeah, one more question. Can you give us a comparison of the monthly costs between the different plans? What, any examples of what the difference in price would be?
Age makes a big difference. If you're older and buying permanent insurance, it's going to be a lot more. And term insurance, and obviously term insurance will cost a lot, but if they cut you off at a certain time period, you know, they have in their actuarial charts how long someone like you is going to live. What I would probably, the best rule of thumb that I could give you is probably 3 or 4 times as much for permanent insurance. So term insurance for $500,000 of someone that's in good health, that's in the 35 to 40 range. My guess is it's going to be $300-400 a year. And that's a guess without doing a calculation. So think, you know, $1,000 or more for permanent insurance for the same amount of insurance. But there are some other benefits it comes with. And these are all things, if we'll talk about the planning that we can do for you at the end. If you want to meet with us personally and ask either for an existing policy that you have, or whether you're looking to start a new policy, we can help you with that.
We had a lot of answers.
Okay. And the correct answer was term, but if you said permanent, that's okay. You're still in our drawing, and in your particular situation, you may be right. Actually, let's go back here. So life insurance, how much do you need? It's going to vary on these particular items. You know, married or not, is there a spouse, depending on your income, kids, other financial obligations. Where are you at in your career? Are you growing your income, or are you at the end stages? And what are your goals? What are the needs what other needs do you have? So many things. It's hard to say, to give you anything specific, but here is 3 different options that apply to a lot of people. The least expensive, I call the expenses method. That what kind of debts do you have? What kind of other expenses would be necessary? Do you need to make sure there's money for kids to go to college? Is there enough money to pay off the house? My spouse will be okay, or my family will be okay. They just need to pay off these debts. So think of what expenses you may have. And typically that's enough to cover, basic amount of life insurance. So no one's left with issues or debts or expenses that they don't need. What's more typical is I call it the 5 times your salary method. Think of your annual income, and 5 times it gives your beneficiaries about 5 years to get back on their feet to figure things out. That may not be enough in your particular situation, but it gives someone 5 years they don't have to change everything overnight, so to speak. And so that's a little more expensive, but it's still relatively cheap, especially if you go with the term option. And then the third one, this one's more expensive, but we call it the income replacement method, or I call it that. And that is we buy enough insurance that the interest earned from the investments would replace your income. So that way someone permanently has your income being replaced. And then at what would normally be your retirement age, that is then replaces what you saved, what you would have saved for retirement. And that then becomes, like a 401k plan or retirement plan, we'll call it that. The principal will be used to live off of that. So you have your income for life, and then there's extra money to replace. So even though it's more expensive, once again, with term insurance, it's not too expensive. And if you're in a earlier stage of your earning career, at some point within 10 years or so, that may not even be the 5 times salary method if you start off with a lot. So it all depends, but those are 3 basic methods that you could use, and that 5 times your salary method is a very easy one. And I gave the answer away. Hopefully you didn't see that last slide. My next question for a Starbucks gift card is, does Granite Rock provide insurance for you? And since I already gave the answer away, we'll just go straight to that one. But answer the question just so you can be entered in our drawing. And now you have no excuse not to be entered in our drawing. So the answer is yes. They provide both a term life and it includes accidental death and dismemberment. So it's based on anyone who's a semi-monthly payroll. And by the way, I just want to make it clear, I'm reading these things. This isn't what I provide. I got this from your HR department. And I encourage you to reach out to them for more clarification on what's provided. But I wanted you to be aware that something is provided. So you don't have to buy all your insurance. But if you look at that amount, 1 times your basic annual salary up to $300,000, that's not a whole lot. And I would encourage you to seek out more on your own. So that can be done through my staff and my team. There's so many online places that will sell you a policy. When you buy it through us, for instance, we'll shop around for whoever rates you best at your age and your health and the amount that you want to buy. And there's lots of online companies that will do the same. So the important thing is that you get enough life insurance to protect your family or those that will be left behind. But know that there is something available for you through Granite Rock, and you see that they do start reducing it the older you get. And that's obviously because you're closer to that lifetime expectancy. And then I also wanted to tell you as well that there is a long-term disability. Now, we haven't talked about disability coverage here, but there is something provided you for work through your work. And if you're out for 90 days, so the first 90 days is up to you to figure things out. So that's why a lot of rule of thumb savings should be about 90 days to 6 months of your income. You never know what's going to happen. And you're never going to get your full income. So that's something to be aware of is that your full income doesn't get replaced if you become disabled through work. And I'm not going to answer questions on that only because I don't know enough about it. So as questions come in about that, I'm going to refer you to your HR department to get more information on that. So here's, for those of you who have insurance, it's important to review it every few years. You don't have to do it annually, but when something, life change happens, you definitely want to review how much life insurance you have. Or just every 3 or 4 years, it's good to make sure you have enough. So salaries and incomes change all the time. And usually for the higher, especially if you're increasing in your income, and what you bought 5 years ago may not be enough. And what you bought 5 years ago could also be too much if family's leaving or your mortgage is paid down or you've built up your 401k plan a lot more so that someone surviving would have enough money. So it's important to review anytime your salary changes, if your family changes, and if your assets change. Think of a home purchase, think of selling a home, think of debts that you've taken on. And if you're approaching retirement, maybe you've built up enough in your 401k plan that now you don't even need the insurance anymore. So I'll pause right there and ask if there's any more questions that came in.
Questions at the moment?
Okay. Well, then let's jump to this last slide. And on the topic of life insurance, there's a lot of other insurances that you may want to consider if we're talking about protecting your assets, protecting to make sure that your assets don't get depleted if something unexpectedly happens. So another type of insurance to consider is long-term care insurance. This is not to be confused with disability insurance. So if you become disabled and can't work, they'll pay you some of your salary. Long-term care insurance is to cover care. If you need someone to take care of you, that's what long-term care insurance covers. It's not to be confused with health insurance. Health insurance is if you have something, an ailment that can be fixed, and a lot of ailments can be fixed. The doctor will work on you until they say, I can no longer make this person any better, and now you need to provide care. Maybe you're not at a place where you are ready to care for yourself, and that's what long-term care insurance covers. Now, if you were to have a stroke and can't work, the disability kicks in for that, and your long-term care insurance kicks in for your care if someone has to take care of you. So it's not disability, it's not health insurance, it's taking care of you when you no longer can take care of yourself. So typically this has to do with older age, after you're retired. And the best time to look at this is somewhere between 55 and 65. Not to say that's the only time you'd want to look at it. And that's because you don't want to pay for it for too long when you don't need it, but you also want to get it before any sort of health ailment kicks in where the long-term care insurance company says, we're not going to insure this person. Another type of protection for your assets is called an umbrella policy. This is something you can get through your auto or home insurance person, so we don't provide it, but I want to make sure everyone's aware of it. This gives you extra coverage if you, above and beyond your auto insurance, above and beyond your homeowner's insurance, and covers almost, I don't want to say everything, covers many things that you could be considered liable for that either aren't included in the auto insurance, aren't included in the home, or you're being sued for a lot more than what your auto or home would pay for. So I would highly encourage you to ask your insurance, auto or home insurance person about an umbrella policy to see if it's necessary for your needs. And this typically, as you've accumulated a lot of assets, you're subject to a lot more penalties if something were deemed your fault. Supplemental health insurance, and this is one that it covers so many different topics. It's hard to just mention one particular thing, but it covers the things that your health insurance doesn't. It also covers types of alternative care that you may like to receive as opposed to standard traditional health insurance. So this is something you typically buy through your employer, and so you'd want to ask Graniterock if they have, or you probably have something available through this where you can buy additional types of insurance. Disability insurance, so you have that provided with Graniterock. You may need a little more, or maybe you have a spouse that doesn't have that, and that's something to always consider. You're more likely to become disabled than you are to die. And so that's why disability insurance is going to cost more, but also it's something very important to have and to look at. And then there's other things, and I just put cancer insurance here as kind of the most common one. And similar to supplemental health, you see the commercials. I think Aflac is one of the bigger commercials out there. And if you're hurt or you get cancer, they will help cover some of the costs and lost pay and the additional costs that go above and beyond health insurance. So it's like supplemental health insurance, but it's specific to a certain type. So in this case, cancer, and there's other types that you can purchase. And I'm not necessarily advocating any one of these. It's based on your particular situation, but it's good to be aware of these and to talk to your insurance provider on these. And we can help with the long-term care insurance is something that we can help with in looking at your overall financial plan if that's something you have some questions about. So I'm just going to remind you, and we'll go back to questions if we have any in a second. I just want to remind you that this is included for all of Graniterock employees. We will help you in evaluating all of these items, give you a summary of things to work on, and Graniterock is covering the cost of this. So this is free to you. There is some information we'll need you to bring in with us. It's hard to sit down with someone and just talk about it. We want to see the numbers. We want to see what you've already saved. So there is a little bit of homework on your part for these meetings, but in my opinion, they're well worth it. And then for those of you that need more complex planning, we give you that $750 discount. And depending on the type of planning, we do something a little more complex if it's necessary. I would say 90% of you would be just fine with the basic financial planning snapshot. But if there is a deeper need, we can help you with a lot of other things. And that's what these items cover. Well, so I want to jump back then to questions to see if anyone else has a question. And here is contact information to set up a financial review with us. And that can be about the topics we discussed today. And it can be regarding your whole financial plan, which includes the topics we talked about today. So it includes everything as much as you want it to. So we'll leave it at that. Any questions come in?
Do you recommend term or permanent overall, generally speaking?
Yeah.
So
the question is what do I typically recommend, term or permanent? I'm going to say term in 80% of the cases is going to be the best fit. Think if term is 3 or 4 times less and you can save more into your 401k plan and save the taxes and have enough coverage to provide for your family, that's ideal. So the only time that permanent insurance comes in play is a lot of times if you have significant assets, you're either in a high tax bracket or you're trying to protect those assets for your lifetime. That's where permanent comes in. So I would say 80% of the time, maybe more, you're going to want the term insurance. It's just a lower cost and allows you the freedom to do all the other things. You know, buy a house, for instance, pay that higher mortgage cost, things like that.
How long would you recommend someone get term?
So that's a good question. How long does someone need term, or should they get term? And it all depends on your financial situation. Now, here is one thing to consider, not necessarily I'm recommending to anyone, but consider buying shorter term insurance, 10 years. And the reason why is you can buy the amount that you need, and if in 5 years you need more, you didn't pay for 20 years worth of term, which is going to cost you more money because the insurance company's on the hook now for 20 years. Buy 10 years insurance, but make sure it's that guaranteed renewable. Now, that saves you a lot of money, and that's something that I like to consider, but what you don't want to get into a place where you're forced to use that guaranteed renewable, all because you tried to save money over 10 years. So 10 years is something to consider. 20 years is a good time amount, but remember, you'll probably, if you're looking at 20-year term, meaning that you have 20 years before retirement, your income, your needs, your life will change. And that's why, sometimes the 10-year works best in 10-year increments. But the 20-year, at the very least, you're protecting yourself for 20 years and your insurance costs don't go up.
Just someone, this probably addressed it, but what happens when you last longer than the term years?
Yeah, so that's a very good question. When you last longer than term years, the insurance ends. You live in.
But then you get that guaranteed renewable?
If you have the guaranteed renewable, but I would just buy a new term insurance policy if you still need the insurance. So if you buy a 10-year insurance, you're in good health, the 10 years ends, go out and buy a new one. In fact, probably, like I said, maybe in 5 years, your life insurance situation has changed. Maybe keep that one for a little longer, but somewhere in 8 or 9 years, it wouldn't hurt to renew and look at your situation again and buy a new policy. But if you leave it till the end of the term, the insurance company didn't have to pay you. You paid them a little bit of money. You didn't die, so technically everyone wins. But you don't want to, that's the one insurance you don't want to collect on is life insurance.
And then another person asked, is permanent the same as whole life?
Yes, permanent is, so the question is permanent and whole life the same thing? Whole life is a type of permanent. So there's several different types of permanent, and it all is based on how it earns interest. So whole life earns interest in a certain way. It's usually a fixed guaranteed interest, usually, and it's a little more expensive the way it works, but you don't have any surprises that the investments didn't grow enough to pay for the term later on in life. I don't want to get too complicated for what we're trying to cover here. That was something that we can talk about. If you have a whole life, you're welcome to do our financial review, and we'll review that with you as well.
But for the most part, you recommend term.
Term insurance is usually the best way to go in most situations, and then save the difference. So even if you can afford the permanent, look for ways to save the difference in cost between term and permanent. But there are times where permanent's a good fit. So, don't rule it out. Talk to someone like me, talk to your insurance person as to whether it's a good fit for you or not.
This says, what is your recommendation for life insurance for children and grandchildren?
So what are recommendations for insurance for children and grandchildren? And I want to say I appreciate all the questions. We've gotten the most amount of questions here than anyone. And that's a really good question. As a financial planner, I'm going to give you my take on that. And that is to save enough money for the unexpected expense. That's your emergency fund. That's what I encourage everyone to have saved up in a savings account, saved up in some investments that are not taxed or that are not in your 401k, or you can borrow against your 401k. So I typically don't recommend insurance on kids. And that's just because the insurance company typically makes a lot of money off of that. But more importantly, you can cover those costs on your own if you plan and save properly. If I was an insurance salesperson, I would show you a policy that covers everyone. And it is nice to know that if something does happen, it's covered. So I don't want to discourage them, but I definitely don't encourage them in any way.
Another question, do you offer term insurance?
So do we offer term insurance? The answer is yes. So if all you need is term insurance, we don't have to do the financial plan for you. We will run it through our quote system that shops around for A-rated, top quality, good service companies. So we've excluded the lower rated, less desirable companies. And we'll find you the best price for the amount that you need. We'll help you find out how much you need. We'll find the best price. And it's the same price as you would get online, but if you like doing it at the comfort of your own home, there's a lot of online companies that do the exact same thing. We shop it through the same, something similar, not the same one. We have access to some companies that you may not have online. But once we shop it through, we say, here's the price, and that gets locked in, and it's term insurance. So you know that it won't go up in price. And if something happens to you, they pay you for as long as you live, or they pay you if something happens unexpectedly. All right, well, we've left our contact information up there. Feel free to reach out via phone or via an email to Christina, who will schedule something for my staff to do either financial plan, or if it's just to talk life insurance, we can cover that topic as well, or anything else that's financially related. We have a college planning course coming up soon, and we've talked about some other ideas as well that we'll present to you.
Yeah, awesome.
All right, well, thank you, everyone, and glad to be in front of you again. I look forward to meeting you in my office.